Right. So now, the other thing we want to talk about right now, Bitcoin. Have a look at our price chart here. 96.22 now is your price on Bitcoin. So, I mean, we started out the day, there we go, at the open, 92.28. So, I mean, at this pace, and who knows what pace really we're looking at. I mean, I've looked at charts for some time now. I've never seen one as vertical as this one. So 10,000 is your next milestone right here. Let's bring in Mark Cudmore, our Bloomberg Markets live macro strategy, joining us live out of Singapore. Mark, you've never been a bull on Bitcoin, but I'm looking at your blog and you're saying that's made you change your mind a little bit, or you've changed your mind a little bit on Bitcoin. Why is that?
Well, actually, I mean, I'd say it the other way around. I've always been a cynic of Bitcoin as a financial asset and as a currency, but I've always been very bullish the price. I still think it's going to be bullish and still going to go a bit higher in the short term. I don't think there's a sign of a top just yet, but we're starting to see those anecdotal warning signs of where it's getting a little bit frothy. So part of the reason that I've been long-term kind of bullish the price, despite being cynical of it as an asset or as a currency, is the fact that it's driven by belief. It's driven by the greater fool theory. It's driven by speculation. So as long as it looks like it's getting new believers at an increasing rate, it's going to keep on going up in price. And we're still seeing that. It's just seeping into the mainstream now. So we haven't had complete saturation yet. But I think there's a few signs that worry me. There was a great article last week about a pole dancing instructor who's now spending more time informing her clients about how to invest in Bitcoin. And she assured people that don't worry when it pulls back, because that means you can just buy more and not to be emotional. And I think there are signals like that. And another previous cynic ringing me up and telling me he was about to invest in Bitcoin after being cynical all year. So I think there's a few flags suddenly saying that, you know what, we might be getting to that point where everyone is piling in. We might be getting close to it. So I think it's the beginning of the end, but not the end.
Okay, it's kind of like Greenspan's rational exuberance here. You know, your pole dancing instructor. There's a taxi driver in China who said that.
Is it your pole dancing instructor?
Oh, is it yours?
Yeah, we want to be clear first.
Your
Mark.
pole dancing?
It's not my pole dancing instructor.
Okay. It's one of those anecdotes collected along the way. It's good journalism there, Mark Cudmore. Taxi drivers in China, they said that before the Shanghai composite burst. We had people buying up property ahead of the subprime mess that led to the 2008 global financial crisis. But as you say, people are piling in. Could there be a lot more upside? Why not get in now, you know, and get out before it all topples over? We still have time, no?
Well, it's a reasonable question. I mean, one of the things is that while we may be coming to the final stages of this, or the beginning of the final stages of this bubble, the final stages are normally where we get the most violent moves. It may seem like it's been crazy already this year, but it doesn't mean it can go a lot crazier still. And there's no reason to have a cap on how far it could go. You know, at the start of the year, it would have seemed crazy to say it was going to 3,000. Now we're approaching 10,000. Why can't it reach 20,000 or 30,000? There's no anchor for value here. So I don't think you can suddenly go, X level is too far. There is no too far when it's about belief, it's about speculation, it's about that greater fool theory. And you do have to rely on these anecdotal warning signs. There's no kind of clear, strict measure, which means it's very hard to call the turn. You wouldn't want to preempt it. Why not wait for the turn, and then you can probably see how far it crashes.
Now, Mark, I've seen a lot on Twitter of this. People started trying to chart Bitcoin. I mean, do we have enough data to actually try and figure out the price move of this this asset?
I mean, I don't think so. People can try doing overlays to previous bubbles, but of course all the kind of scale seems to change all the time. People have tried using Fibonacci projections, which I think are always tenuous at the best of times. The point is, these are uncharted territory. So any kind of technical analysis of how far we can go is really just a guess. It's kind of finger in the air. So if someone says it's 10,000 or someone says it's 20,000, there's not one that's more reliable than the other. This is something that's trading off belief, so you need to feel that sentiment. And this is why those anecdotal stories are important. But I do stress it's only at the early stages of those anecdotal stories implying that we're reaching saturation. We could have another month, another couple of months of this, but it's time to start looking out for those warning signs, as opposed to earlier this year. It did look like it was the early stages of the bubble. Now we're getting to the later stages of the bubble.
That's a good point. Mark Cudmore, we're going to leave it there. Thank you so much for that.